As you go through this free course, my goal is that you have an understanding of what the stock market is. You have an understanding of what the future market is. So what we are going to be doing here, I'm just going to give you a general idea, something that is not found on YouTube, something that can go deep. When you understand how to trade, you can decide to trade any market. You can trade Forex, you can decide to trade anything that you want, so long as you have the foundation, so long as you have the knowledge. You know how to read the stock market, you know how to read the charts, candlesticks, you know how price action works. When you understand those things, you can now apply it in any market. The main important thing is for you to have that general understanding, that background that is going to take you far. So before we dive into the future market, which is what I trade, I just want us to have a small comparison about the stock market and the option market. So many traders in the market that you see, they start trading stock because stock is like the traditional one that anybody knows about. So when we talk of stock, we talk about things like Apple, things like Google, Facebook, any company that you see out there that is public, they have stocks in the stock market. So then option is like renting those stocks. And now there is also futures. When I discovered future, I was able to get up in the morning, trade before going to work because I was working as a senior DevOps engineer. And when I come back from work, the market is still open even in the night. So I was able to still trade in the night if I wanted to trade. And so because of that flexibility, it was just so amazing for me. When it comes to traditional investment, which is the stock market, most people who trade the stock market, you just go and then you buy your stock normally. And when it goes up, you are going to make dividends and the stocks are also going to appreciate, and that is how you are going to make money. So the pros about trading stock is that it is a very simple process. You just buy when the stocks are going up like this, you buy. When you buy here and then it goes up, you are going to make money. When it falls, you are going to lose money. And when it goes up, you are going to make money. One thing that I want you to know is that there is that price fluctuation in the market. These things are called candlesticks. These green things are called candlesticks. And if it's green, it means that the prices are going up. When it's red, it means that the prices are going down. And in every stock market, you are going to always see price fluctuation. It's not going to go up continually. And so that is what is happening. So when it comes to stock, when you buy, it's very simple. It's a simple process for you to just buy. You don't need any thinking. Some people don't even make any analysis. They just know that this is my favorite stock, and then they go and they buy because they know that this stock will keep appreciating, and so they make money as the stock goes up. But if you are doing anything in the stock market, my encouragement to you is that understand the technical analysis so that you'll be able to know when to actually buy your stocks. So when you buy that stock, then it means you own a piece of that company. Let's say you have a stock in Apple. It means that you have some shares in Apple. You have a piece. You are a part of that company. So that makes you feel like you are a business person, right? And then now there is long-term growth potential, because if it's a company that is going up continually, then you keep growing. Let me show you something. So let's say, for example, this is Apple stock. Let me just go to the past year and then you see what the stock has been doing. So you see how it has been growing, right? So if you look here generally, you see where the stock started and now it came here, and see how the growth has been, which means that if you ever bought this stock down here, then the price would have been here. And that is how most companies are. It just grows like that, and because it keeps going up, and you see this green and red, just as I said, it keeps going up and down. And there are also so many different strategies to be able to trade this or to be able to buy this. But this is just to show you how stocks keep going up. If it's a good company, of course, there are some companies that are actually also dying and falling. So that's why you need to understand your technical analysis, so that you need to know the kind of stocks that you are buying if actually you want to buy stock. Now that you have a general idea what stock is, the next thing that I want you to know is that, you know, when you are trading the stock market, there is something, the PDT rule. You need at least 25,000 to be able to start trading the stock market if you have to trade the stock market, which many people don't have that amount of money. And so because of that, there is also something called cash account that you can get. But when you get a cash account, you are limited the number of trades that you can take. every week and every day. And of course, when the money that you have in your cash account finishes, you will only get it the next day. So those are some limitations that hinder people from actually start trading the stock market. Now, another thing is that the stock market is also open 9:30 to 4 p.m., which is Eastern Standard Time. So for me, California time, PST, it opens at 6:30. And now, so that limits some people. Maybe you have a full-time job and you want to trade, but because of this time limitation, now it hinders you from trading, or it hinders you from pursuing this journey. But when it comes to future, as we are going to notice, this future market is actually open nearly all the time. It closes just 1 hour a day. So we are going to talk about that. Now, another thing that people trade is called option. So option is like you go to this company that has stock, you go and rent that stock for a particular period of time. There should be a period of time when you have to return that stock. So option just means that you have the obligation but not the right to be able to buy that stock. So you have that obligation, you rent it for a particular period of time, and now if that expiration date comes, you are able to buy it, but you don't have that obligation to buy it. Some of the disadvantages why I personally don't like option is because of so many Greeks. So if you've traded option before, you are going to understand what I mean. It has like theta, it has delta, it has gamma. You have all these things that become so overwhelming, especially for new traders, because you need to pay attention to all those things. There is also time decay. So if you buy an option now, as it's going closer towards the day of expiration, time decay increases so fast. And so even though you could still be in profit, at the end of the day, you could still lose money because of time decay. When I found future, I saw that, wow, futures doesn't have all those complications that the stock market has and the option market. When it comes to future, it's amazing because it's so flexible and there is so much liquidity. So you can trade future contracts without any complication, like all those complications that you saw in option or stocks. Future doesn't really have those complications. The biggest limitation that future has is that when you place a trade, that trade can go against you and then it wipes out all your account. So it doesn't have any limit to the amount of money that you are going to spend in that trade. Unlike option, with option, when you spend, let's say $500 and you buy an option contract, what happens is that you can lose your $500. It will not go into any other amount of money that you have in your account. But with future, if you spend $500, even if you have $10,000 in your account, what happens is that it can wipe out all that $10,000. That's why you need to be very careful and you need to use stop loss in order for you to be able to protect your account. So what are the pros of futures? I know, as I've been explaining, you must have understood some of the things. There is no PDT rule, so you don't need any 25,000 to be able to start future. You can actually start as least as even $50, but I don't recommend that. I recommend you start with at least $200 to $500. That's the least amount of money for you to start with, and then you can trade nearly 24/6. The future market closes just 1 hour every weekday, and on Sunday it actually opens around 4 p.m., which makes it more flexible for anybody who has a full-time job, anybody who wants to trade at night, anybody who wants to trade before going to work. So it makes it so flexible, and then it doesn't have any time decay. So it means if you buy your contract, even if you hold it for so long, there is no time decay like in option. There are so many different platforms where you can trade. So the platforms that I use, that I'm going to share with you, the two platforms that are very good for beginners, they have margins, which means that you can buy a contract that could have costed you $25,000, but you can just use about $2,500 to buy that contract. There are other companies where you require to put so much money to be able to buy those same contracts. So now there is so much liquidity in something like S&P 500 futures, so which is ES. There is also NQ. Those are indices, and there are also S&P 500. So S&P 500 is the top 500 companies in the US, and QQQ is a top 100 tech companies in the US. So what happens is that this S&P 500, it has a future contract which is called ES, and then QQQ also has a future contract which is called NQ, and those ones, they have so much liquidity. That means it moves very fast, and because it moves fast, you can easily make money from those contracts. So, and then another thing is that unlike options, you don't need to be picking strike prices. You don't need to, you just have the ask and the bid. So you just buy and you sell. That is how easy it is. It's very close to stock. If you've traded stock before, it's very close to stock. You just buy and you sell. But the difference here too is that with futures, you can actually make money when the contract is going down. This is one thing that took me a long time to be able to understand this concept. But because I've done drop shipping, it was easier for me to understand. So it's like you sell something to somebody, you sell that thing. Now you are waiting when the price drops, then you buy it and give it to that person. It's just like drop shipping. So with drop shipping, what happens is that you are going to create your website, you have your product on your website, somebody buys that product. Now you take the money from that product that person has bought, then buy something from the manufacturer and then ship it to that person. Even though you set up everything that works automatically, is the same concept here. And so you can actually make money when the stocks are going down, and you can make money when it's going up. Unlike stocks where you only make money when it's going up. So now that you've had a general idea, let's now go ahead and continue to talk about futures. So when it comes to future, the future market actually started with farmers. So these farmers, they will farm their crops. Let's say it could be wheat, it could be oil, it could be anything, corn, soya beans. So that is how it started. So when they farm this product, now somebody, let's say is wheat, and then the person who is using this wheat to make like bread, they are going to come to this farmer and buy this contract. That's what they used to do. And now it means that for you to do that, you have to sell to somebody who is somewhere. They have to come to you to buy, and sometimes they might not give your money. So because of all that complication that was happening between farmers, they decided to create this future market where they have this contract, this thing that is binding them. Now with this contract, they can actually make a contract and decide on a future date. Let me give you a basic example that you can understand. So imagine that you are a lover of coffee, and now the bag of coffee costs $10 today. So what will happen is that, and then you are worried that the price is going to increase. So what you can do is that you can go to a farmer, and this farmer is also worried like, okay, maybe prices will also change. So they want to lock in their profit so that they know ahead of time that this is the amount of money I'm going to make. So the two of you could decide you are going to pay $10 in 3 months, $10 in 6 months, anytime that you guys decide. And now when you have agreed upon that price, now what will happen is that if the price rises to $15, you are going to still pay $10, but now you will make a profit of $5. And what will happen to the farmer? It means that the farmer will still give you for $10, but that farmer would have lost some money, right? And on the other side, if the price actually dropped to $7, then you will still pay $10, but the farmer will win at this point. So that is what happens in the future market. That's just the general idea. And now with this future market now, since we don't have any product, we come now and we predict that the price is going to go up or the price is going to go down. So is this prediction where we are going to be making money. So the future market has so many different contracts. If you come here, this website is called bar chart. When you come here, so this is future right here. You click here, you are going to see so many different future contracts that you can trade. Now, the one that is very common, you can come here to where it says indices. Now, these are all different contracts and their expiration date. Remember, I was telling you that there's going to be some future date. This is how you know the dates. This is how you know what date and when the futures are going to expire. So you can come here, take your time and study this platform. You'll be able to have an idea when the future market expires. So you come here, you see different things, energy, all these things, grain. If you come here to grain, you see the different grains. You come here to livestock. These are all future contracts that you can trade in the stock market. Some of them that I trade is ES. So ES is S&P 500, which I already mentioned. So which is SPY for those who are trading futures. Now there is also NQ, which is a NASDAQ. There is crude oil. There is RTY. There is gold. There is platinum. So these are some common contracts that you can start trading. So now those contracts, they are a little bit expensive. One of them, I'm going to show you the prices. They are a little bit more expensive. And because of that, these platforms have made a tenth of those contracts. So they have made it cheaper. So if you are starting and you don't have enough capital, this is what you are going to start with, which are the micro futures. So these are the micros right here. You can just pause and then go ahead and see the micros. So let me show you. So this is one of the platforms that I use to trade. So it's Tradeovate right here. So you can come here. Here you look at margins. So margins will tell you the amount of money that you need to be able to put in your account for you to start trading. So if we come here, we look for something like ES. This is ES. You need at least $500 for you to be able to trade one ES. And if you have to keep the trade overnight, then this is the amount of money that you need in your account, $16,000 something. So but since you are a day trader, you will not need this amount to start. Now when it comes to NQ, which is this that we talked about, you see you need $1,000 in your account for you to be able to start. This is RTY that we talked about. You need $500 in your account. So you can go ahead, come here and look at them and know exactly how much you need to be able to start trading. So when it comes to the margin of ES, you just need $50 and you need $1,600 for overnight margin. And now you look at all the other ones. If you look here, micro for gold, you need $200. And then you just check here, you'll be able to see the amount of money that you need. So what you need to start trading, you need $50. And I'm even going to tell you a cheaper way that you can start trading, even practicing, so that you learn your strategies first before you even ever put your money in the market. This is a skill that everybody needs to learn. So now that we understand how much we need before we start trading, the next thing I want you to talk about is, where do you actually trade? So I've already shown you Tradeovate, which is the one I use to trade right now. So now where do you actually trade? So one of the things that I want you to know is that the place where you trade is very important. All these stocks, like if you look at it, it's so confusing. There are just so many things that you can trade in the stock market. It's just like you go to the shopping mall, you don't know exactly which shop to go to buy something. And so that is the situation here. So in order for you to start trading, it's best for you to go to a place where it's more account friendly, a place that is flexible. So the best platforms that you can use, especially as a beginner, one is Ninja Trader. This is Tradeovate. Both platforms are actually owned by the same person. And then with this one, for example, this is also a good platform. But the disadvantage here is that it requires huge capital for you to be able to start. So you can go ahead and check their margins. You'll be able to see that their margins are so high. There is no need for me to show you here. So now, why are we choosing this platform? Just because of margin. Margin is an initial amount of money that you need to deposit in your account for you to be able to start trading. You need about $50 to start trading the micro futures. But the thing that is there is that you can't just put $50 in your account, because immediately it moves one step away from you, your account is going to be liquidated. Liquidated means that it shows that you don't have enough money again, which is why I said that if you are starting, you need to have at least $200 in your account. So, and then for standard futures, for standard ES, you need $500 like I showed you. And then for overnight margin, you need a bigger amount of money. So now when you are trading, in order for you to make money, you have to learn to manage your risks. The most important thing is not even the strategy. The most important thing is for you to learn how to manage your risks, so that if any trade ever go against you, because the temptation is people will sit and say, oh, it's going to come back and I'm going to make the money. Never make that mistake. When you are trading and you feel that it's going to go on this direction, after you've made your analysis and then it goes against you, you need to come out of that trade and secure your money. You don't want to let your money, you don't want to let it rule, and then it goes against you and you lose your capital. There are so many people I've spoken with who have blown a number of accounts. And for you to avoid that, the most important thing that I want you to take out of this course is that you want to learn how to manage your risk. So if you are starting and you are trading with a small account, the first thing that I want you to know is that you have to learn how to use stop loss. Another thing is that, when you are taking any trade, you should make sure that you have at least 1-to-3 ratio. The highest risk that you should take is 1 to 2% of your account. But of course, I understand that when you are starting with a small account, it's very hard for you to make this decision. So just be mindful of the fact that this is how important this is. just be mindful of the fact that when you have a small account, you need to be mindful so that you don't blow your account. So one thing about trading is that you are going to make so much money, but you need to spend some time to learn. And of course, blowing account is a process of learning. It's not as if it's a bad thing, but you need to make sure that you are learning from that account that you are blowing. So, and the most important thing is to learn how to manage your risks and how to use your stop loss so that you don't keep blowing account. If a trade goes against you, it doesn't mean that every trade you take, you will always make money from that trade. But you need to know exactly why you are entering that trade so that when it goes against you, you know exactly where to come out of the trade. So now I promise you that I'm even going to tell you a cheaper way that you can start that is even less than $50. One of the things that you can do is to use prop firms. So prop firms, let me show you. So this is a prop firm. It is currently 80% off. So I'm going to have a code down below, or I'm going to put the code on the screen. So if you want to buy and then you use that code, you are going to have 80% off. So let me go down and explain it to you. And if it's not 80% at the time when you want to buy, just make sure you always use that code because you are going to have that percentage of whatever percentage that you have here. So when you come here, you scroll down just like this. You are going to see that you can buy this account for this amount of money. These are the amount of money here. So the one above is for people who are using Ninja Trader. So all this amount of money, you can buy their core evaluation account. So for you to prove that you are able to trade, so what happens here is that you can come here, buy this account, and now when you get this account, you are going to prove that you know how to trade. If you pass the account, for example, with this $50, right, they are going to give you $50 if you pass this account. So you will come here, you need to buy it first for this amount of money, which is 168, but 80% of that amount of money, you will see that you buy it very cheap, like 20 something dollars, right? And now you have this account. When you have this account, what happens is that you are going to have a profit target. You need to make at least $3,000 without losing $2,500. And so when you pass that account, then this company is going to give you $50,000 for you to trade with. And the good thing about it is that you can trade up to 20 accounts. You can put up to 20 accounts together. And every 2 weeks, as you make money, every 2 weeks, they are going to give you $2,000. Imagine that you pass 20 accounts. So every 2 weeks, if you are having $2,000 from 20 accounts, that's going to be $40,000. That is how these things are. The most important thing, I don't want you to be carried with the money, but the most important thing is for you to learn the process. When you understand your process, you know exactly what you're doing, then you see that you'll be able to easily grow your business trading. And so this is just example of $50,000. You just go ahead and check 75,000. There are so many different ones, 25,000. I personally like to use the 50,000 account. So now when you scroll down just like this is the same thing. So this now is for trade of it. If you want to buy it, make sure that you buy this one is for people who have Windows computer, who are using Ninja Trader. And this one here is for people who are using Trade of it, who have Mac computer. So now you just go ahead and choose any amount that you want. Now and then I'm going to put a code down below. So when you click on it, you will not pay this amount except you don't use the code. So when you use the code now, then you are going to have 80% off. And so the amount of money that you are going to pay is just going to be like $29. And so now, why is this very important? So now if you know me, I will always say that before you start trading with real money, you need to first of all practice with paper money. So paper money is called simulation account. It's for you to be able to practice to know how to trade. Now, when you go to Tradeovate or Ninja Trader, you are also going to have paper money there. So sign up, create your account. You will have a simulation account where you can start practicing how to trade. Now, the disadvantage with that is that sometimes you don't put in the emotion because you feel like, oh, this is fake money. And so you don't put in so much effort to learn your strategies. But when you use something like this, when you use something like this evaluation account, you will see that you become serious because you have put in at least your $25, you've put in your $28, you've put in some amount of money to be able to buy that contract. So you put in some effort to follow your strategies to learn how to trade. And so even if you are a beginner, my advice to you is that try to get these funded accounts so that you practice your strategy with a small amount of money. For you to lose that account, then you have to lose 2,500. Imagine that it was your own money that you had put in your account. Then it means that you are going to lose 2,500. And so be very careful. And my advice is that go ahead and use that to first of all practice your strategies. And then if you pass the account good and fine, then you'll be able to have that 50,000, 25,000, 100,000 or whatever account that you choose for you to start trading with. And when you make the profit, then they'll give you that amount of money as I explained. That is what prop firms are all about. So when I was talking, I mentioned demand and supply. So how do you know this point? So this is one strategy that I use in my trading. So what happens is that I'm going to come here. I'll click here just like this. And I'm going to draw it, and I'll just draw it like this. Now look at something. If you come and then you stretch it out, you see this came here, reached here and went back, because it is believed that buyers and sellers, they have agreed that this is the highest or the lowest amount of money they want to pay for the day. And if you keep going, you see that it also comes here. What happens? The same thing happens here. So this is just one strategy. Does it mean that it can break through? Yes, it can. That is why when you are trading, if it comes here and you want to buy, you need to put your stop loss under, so that when it goes against you, you know that it has already gone against you. So you come out of the trade. So it's just like you are sitting here. So it's demand and supply. So think about it. Let's say you are here on the floor, like where I am. I'm in a story building. There are some rooms up. So right down here, it can either be support or demand and supply. The same principles, they are interchangeably. They have different meanings, which I don't want to spend time and explain in this video. But when you go up now, so there is some resistance that I can't go up. But upstairs, there are some other people in that story building. So that is what it means. So even though there is a resistance, it is possible for you to still break through and go to the floor above. So just take note of that. Now, another thing that I do is that I just clone it here. I'll come here and I'll clone this. Then I'll go up. I'll also look for a point. See right here, you see these two is exactly the same thing. And I'm going to come here and put it here like this. If you scroll through now, you see what happens. It came here, the same exact thing happened. So this is just one strategy. And this is a simplest strategy that I want you to start practicing. So go to your chart, look for all these points every day. Look for all these points like this. There are many different strategies, and I'll keep teaching those strategies on my YouTube channel. And if you are interested in my course, you can go ahead and purchase it. I'm going to explain all the strategies that I use inside my course, right? So now what happens here is that when you have this line, when it comes up here, you are going to do what? You sell, and then it comes down here, you buy, it goes up, you sell, it comes down, you buy, and that is exactly how you are going to be making money in the stock market. So let me show you a live example, and I'm just going to use a prop firm so that you are able to understand. So right now I've entered this contract and we are losing $200 already. So this is where, because I saw here, this was the end. So I'm going to put my stop loss at the top here, and then I'm just going to watch the contract. Right now we are losing $100. So I'm taking two different trades. I'm taking two different accounts just so you see how the power of using many accounts. So now if you look here, now we are in profit, and now look down here, you see that I have two accounts, and this is the amount of money that we are making for the two accounts. And my prediction is that this is going to come down and is going to reach here, because that's where I had already looked on my trading platform to see where the ending is. And now this is trade of it. Now you can see it has gone back and we are at zero. And this is one thing that you have to understand. It's fluctuates. So price fluctuates, it moves up and down. So but when you are trading, you need to be confident about your strategies, because you've already checked your chart, you've studied, so you know exactly why you are entering that trade. So now it's going on our direction. You just have to sit there and then spend time and watch and see exactly what is happening. So let's just keep watching. So you can see here, from here you'll be able to see the money that we are making. You see how it's going back and forth. You don't have to worry. You don't have to bother yourself. You need to be as calm as possible. That is my goal here. And for you to be able to be calm, you need to have good strategies for risk management. And so, because you have those good strategies for risk management, it keeps you calm. Now, let's just keep watching and see what happens with the trade. So sometimes it's going to take some time, but you just now, the good thing is that it's already on our direction, so we don't have to worry. So we have already made $300, and then it keeps going. And mind you, one thing that I want you to take note of is that we are doing 2 accounts. So we are trading 2 accounts, and these are the monies that we are making. So if it was 20 accounts that we had, you will see how much money you'll be able to make. The most important thing, like I said, is for you to master your strategy. So right now we have reached $1,000, and then it keeps going. So we are watching. So, and of course it keeps going back and forth. And now another thing that I want you to spend time and learn is price action. So the price action is for you to understand the formation of the candles. So when you understand how the candles are forming, the way they are forming, how they are moving, you know, the type of candles, you'll be able to tell what will happen in the market. And of course, one thing that I want you to know is that we are doing a clever guess. It's not as if we know exactly. So at this point, we are already at $2,000. Now, wow, see, you can see the power of these things. Just as we are talking here, look at how much money we are able to make. Now we are at 2,600. I'm actually just going to come out of this trade right now. And so I'm going to end here because I don't want it to go against me. Even though you see here, this is where we're planning to go, but I'm just going to end here because I've already made enough money. So we have to be disciplined. As you trade, you'll be able to understand the different times, the decisions that you want to make. Now, you don't want to make money and then allow the money on the table for it to come back against you. You see how much we're able to make for each account, and then the total, it was 2,500, 2,600 for a very short period of time. So with time on the YouTube channel, I'm going to teach you how to use stop loss. And if you're interested in my course, I'm going to teach all those things in the course. So you see the strategies we use, and you see the power of prop firm. So now that we have come to this point, one thing that I want you to know is that I want you to define your goal. Don't be so carried by all the amount of money that you see people showing on social media. Those amounts are good, you know, to motivate you, to show you that this is possible. But one thing that I want you to know is that you need to put in the work to learn your strategy. When you have mastered your strategy, the sky will be your limit. You'll be able to make any amount of money you want, so long as you've mastered your strategy. So when you are trading, especially with a small account, if you are able to make $50, take that $50 and come out of the trade. The most important thing is for you to master how to place a trade and how to take your profit, also to prevent losses. So when you know how to master that with your small account, have set rules for yourself. For example, myself, I don't like to take more than 3 trades a day. And if I've had 2 reds for a day, I'm done for that day. So of course, these 2 reds, it's not as if I'm losing so much money, but because it went against me and, you know, it hit my stop loss, so I'm done for that day. And if so, I don't have to. Sometimes many people go and they start revenge trading. That is going to blow your account. Avoid all those things. So make sure that you avoid over trading, because you can say, okay, wow, there's money all the time on the stock market. You want to just keep trading. Avoid that. By 8 a.m., I'm already done trading because I have to drop my children at school. I trade just for like 30 minutes, 1 hour, maximum 1 hour, 30 minutes for a day, and I'm done. And so I discipline myself like that. And because of that, I'm able to do other things for the day. I don't get stuck on the chart. I got here because I've taken time to be on the chart. I've practiced, I've learned, I've spent hours upon hours on the chart, understanding my own strategy. And of course, you are blessed that I'm able to share these things with you, and you don't need to go through all the difficult stages that I went through learning a strategy. That is why I'm showing you this strategy, so that you can just start flying, you can start running, you can start perfecting, and when you master it, you are fine. So another mistake that you should never make is to ignore your stop loss. Sometimes you even have a physical stop loss and then you keep moving it down. Please avoid those things. Another thing is also that trading at the wrong time. So in the middle of the day, sometimes the volume is very low. So if you have trade, you are trading all day when the volume is low, then it's going to waste your time. You keep losing money. So avoid those kind of hours. So now that we've come through this course, I'm so proud of you. Just go ahead and perfect your skill. Go ahead and open a simulation account and start practicing. Practice, 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 practice. You can get a prop firm, and when you get that prop firm, you go ahead and start practicing. And if it happens that you pass your account, then you are good. You'll be able to start making all those amount of money. And when you start trading with your own real money, make sure you start with a small account and grow that account. Possible. From the beginning of this year, January 2025, I decided to make a trading plan starting with a small amount of money, a small capital, which is $500. I started with $500, and my goal is to take this $500 to $50,000 trading. And so this is a trading plan that I have. So with this plan that I have, you see that with that $500 that I was starting with, this is a daily profit target. This is what I'm supposed to make. All this money here is what I'm supposed to make every day for me to be able to get to that amount. So you can see that these are the targets, but every day I'm actually having more than what the target is. And I've not had any red day. You can imagine from that beginning till now, I've not had any red day. I've been making profit every day. Like here, the target is $41, but look at how much I made, 400 and something dollars. Here is how much. This is how much I made this day. And so some of the days the discrepancy is really big, and that's how I'm just growing this account. I know that by the end of this period, I would have made more than $50,000, because sometimes when you are trading, you feel like you want to have that huge amount of profit. But if you just keep having this small amount of money, since you are consistent, so long as you are consistent, you are growing your account, you are learning and you are growing, it's going to help you to be consistent throughout. That's the most important thing. So we see that it starts small, and as we keep going down, the targeted profit keep increasing. And that is how you grow yourself. As you keep growing, you keep mastering your strategies. That's how you also keep growing your money. So like now, right now, I'm here 4,000 something, almost 5,000. But this is where I'm supposed to be according to this trading plan. I'm supposed to be at 1,500 and something dollars. But because I'm having more profit compared to what the chart gave me, or compared to what is here, I'm already at this amount at 4,000. So if you come here to my account, my trading platform, this is the money that we have right here, $4,748, which we have made for this period of time. Then if you are able to grow this small account like that, for a trader you could make $1,000. Now with 10 trade, you'll be able to make $10,000. That is how trading can change your life. My goal here is for you to first of all focus on practicing, focus on learning. Learn. Don't go into the market with your money when you are not comfortable with your strategies. So all I can tell you now is that you should learn and learn and learn. And now we have come to the end of this course. I'm proud of you. I wish you all the best on your journey. So from here, what next? You can make sure I'm going to be teaching my strategies on my YouTube channel. It's a completely new channel. And go ahead and binge watch every video that I have on the channel. There is going to help you. And also I'm going to have a course that you can go ahead and buy that course to help you, avoid some of the mistakes that I made, avoid some of the mistakes that many people are making, so that you can easily build yourself, you can easily grow yourself, you can learn a strategy that is already tested and proven, and so you will avoid making all the mistakes that many beginners traders make. And also, if you want to work with me one-on-one, that you want me to hold your hand and trade with you, just go ahead and send me an email if you really need some extra help, and we are going to see there. So I wish you all the best on your journey. Always remember, one thing that I always say is that you are an overcomer. Trust God. He will guide you through this journey. The most important thing is practicing. And one thing that the Lord is telling me is that this year is our year to flourish. As you go out there, know that it is your year to flourish. I wish you all the best, and I'm going to see you